June 23rd, 2008, this is vlog number 33 for AbsoluteGains.com. Lots of stuff to do today, so let's get to it. First pick is to get long SDS. SDS is the ticker symbol for the ProShares Ultra Short S&P 500 fund. It tracks twice the inverse of the performance of the S&P 500. So when the S&P 500 is down 1%, SDS should be up 2%. So this play is actually a short on the overall market. We're going to see more downside in the near to midterm future. The second play is a buy call. Even in this market environment, a few names look good, and this is one of them, Intercontinental Exchange. The ticker is ICE. Here's the weekly chart for the last 3 years. There's an obvious support line at 120. It hit that level 2 weeks ago and then bounced up last week, so it's time to get long and put a tight stop right below the $120 mark. The upside here is pretty large versus a maximum loss of about 7% if it drops and hits the stop level. Which brings me to the first losing positions that'll have to be closed on AbsoluteGains.com. On May 13th, I made a long call on XLF. The support line was at $26 and it was breached when on May 20th it opened below support at $25.87. I'll put the exit price as $25.53 because that's the price it closed at that day. Another pick that's been stopped out is Liz. On June 11th, I got short Liz at $16 a share when it crossed through support. Well, 2 days later, it crossed back up through that line, so that position was exited. So that means I'll post a break even on that pick because if I got in at 16, then stopped out at the same price, I'm even. Also, if I shorted at 15.28, as I said to in vlog 32, then I'd get out now at virtually the same level. Either way, it's a push. Heck, I'll even post a 6.87% loss along with that to show the loss I would have taken if shorting at 15.28 and then being stopped out at 16.33, the price it closed at the day it breached resistance. It is very important to use stops when trading around support and resistance. You can really get burned if you don't get out of a trade when it starts moving against you and try to wait things out. For example, the XLF today closed at $21.38, which is a full 18% below the entry price on May 18th. Now that's a lot harder to swallow than just taking a small hit when the trade starts to move against you and crosses that support or resistance line. So I think I'll post that as an exit price as well, since the site didn't post the XLF trade was closed until today. But for future reference, if I ever make a trade based on the support or resistance line, I'll have a stop in place whether I mention it or not. Lastly, I'm going to close 3 positions. I'm covering the second half of my short position in PMI at $3.19 a share for a gain of 47.6%. I initially made the short call on this name on March 6th at $6.07 a share and have already covered half when it was at $4.86. This one turned out to be a pretty good pick. I'm also getting out of Walmart, trading at $56.42 after hours today. That's a gain of 12.41% over the initial buy price of $50.19 on March 6th. Lastly, I'm closing the long position in DBA. It's trading up after hours to $40.85 a share, which is a profit of 3.81%. Some major tides are starting to shift, so I'm probably going to see some new opportunities soon. Keep checking back.
All content contained on and associated with AbsoluteGains.com is only an opinion.